It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Hey, welcome back to another episode of the Real Estate Breakfast, your largest property podcast in Australia. Tell you what, if you are a new listener, there is over 1,000 episodes of content for you to surf through, so that should keep you fairly occupied for a while as we talk property from Rockhampton to Mooloolaba and all points in between, streaming as always on a number of platforms including Amazon and Apple Podcasts. Today is Sunday, April the 13th as the weekend continues. I hope it's a good one at your place. You might be diving into some more cereal, some breakfast on a Sunday, getting ready to attack the property market out in your local suburbs, wherever that might be. Well, the working week was another busy one as we caught up with more real estate. We spoke fractional ownership, 1/8 in fact, talking on the Gold Coast to John and Sharon, which was pretty interesting. We also spoke to Jacob there in Melbourne about the local property market, rental laws and pet laws and some of the changes that have come into SA. We spoke to Paul there in Adelaide, and Matthew always drilling down on what is happening in Perth. So all of those interviews coming up next.
Grab your weekly dose of inspiration to help build a real estate portfolio. We talk to the best in the business every day. Learn from the professionals and know your property with us.
Good morning and welcome to the Real Estate Breakfast. Always nice to connect with the Gold Coast. Is there a better place to be?
Good morning, Craig, and thank you very much for having us.
Yes, no better place.
It's a nice lifestyle for sure. Now, we're going to be talking, and I want to throw up this example because the Gold Coast Bulletin reported about this co-ownership that is making a bit of a splash in certain parts of Australia and indeed around the world. And if we look at the Gold Coast, if you want to get a 1/8 share, let's take a 3.5 million luxury apartment. For $500,000, you can get a slice of that. You would enjoy a 6-week use of the property without the burden of full ownership. I guess that's what it's all about. And this sort of thing is what you're wanting to do there on the Gold Coast. I should say that this is not timeshare. So perhaps just sort of make the distinction, because when you hear about these shared ownerships, straight away people think, it's a timeshare, but it's not.
Very relevant, Craig. It is definitely not a timeshare. The main difference, of course, being that with a co-ownership business model, the owners actually own the title to their share in the property. It is quite easy to do. It's not difficult to divide the title into 8 different names, and therefore your name or your buying entity is on the title, and at any time you decide or wish to sell your share on the property, just like you would if it were your own property, you are able to resell.
Now, Sharon, tell us a little bit about some of these properties that you've got, because you've got holiday homes in Italy and New Zealand. A villa near Florence sounds pretty good, and also Queenstown. Now, that is a lovely part of the world.
Oh, it is. It is. One of the best things we ever did was becoming involved in a villa in Mercatello sul Matiro in Italy. We've been in that villa now for 14 years. And with that sort of property, you have 1 month each year. It's really beautiful. It's local. It's immersed in the countryside and the local people. And with that sort of thing, John and I generally travel out during the day, or maybe just use it as a base in Italy and travel to other places. Our ones in Queenstown, for instance, one of the homes that we've got there, it was on Grand Designs New Zealand when we built that during COVID, which was a difficult time, but it's a magnificent property. It's 6-star. And then we've got other properties there where it's an apartment and people can come and go, and we manage it and look after it, and they can travel around to the vineyards, they can go on the bike riding, they can ski. There's just so many things to do.
Melbourne's median dwelling price fell 2.26% over the past year, dropping to $795,000 and change to $778,000. But regional Victoria, Jacob, also saw a 1.53% dip. Median home price now $573,000. That might surprise a few people out there.
Yeah, absolutely. It sounds very affordable when you can compare it with any of the capital cities across Australia. And across regional Victoria, we have a very diverse makeup of smaller regional cities and towns that offer incredibly attractive amenity and lifestyle options there. Now, it's interesting, in some of our regional centres, the median prices are radically higher than that. If you head down towards the coastal regions, like the Mornington Peninsula or the Surf Coast in Victoria, you're going to see those median prices sitting in the high single millions or even 2 or 3 million for the median prices there, because that's the quality and amenity and type of property available to purchasers. But there, as I said, a wide selection of home types available in either bustling, sort of just under capital city size regional centres through to, quiet, quaint, sort of foodie and amenity lifestyle-based towns as well.
Now, you mentioned before the break that February's interest rate cut has reignited interest from home buyers and investors. What about these Sydney buyers at the moment? How many of those are you seeing come into your market? Because it seems that they're increasingly on the move, and it's Melbourne that they are looking at in terms of the affordability factor.
Well, when you compare Sydney and Melbourne appears to be a vastly more affordable option, particularly if you're one of those first-home buyers that is trying to get a foothold into the property ladder. Sydney is the second least affordable housing market in the world. I referenced the fact earlier that Melbourne's sitting there at 7th. So Sydney's number 2 in the world, which, speaks volumes in terms of how hard it is to secure a property. So when an investor or when a first home buyer or someone who's contemplating a downsize looks at the Sydney marketplace and the proximity to the CBD or the amenities on offer, and then they compare it with Melbourne, they see that they could either enter into the market or secure an asset at a significantly lower price point, but still, particularly if they're an investor, get a fantastic rental yield on that property. So it's very attractive when you compare, both of those two Australia's large capital cities.
Remember, we are not a real estate company. We are 100% all about increasing your awareness and knowledge for buying and selling properties.
And since we're talking about these suburbs, let's grab your biggest standout suburb in Australia for 2024. What would that be?
So I'm now talking about a suburb that started to come through fairly quietly, but I think has much more to come yet, because I think that's important. It's easy enough to look around the country and to pinpoint the standout suburbs. I own property in a couple of the Adelaide ones where prior to 2024, they'd been fairly quiet, and I gained $150,000 in value in a very short period of time in them. And that includes the northern suburbs in the less desirable part of Adelaide, up and around the Elizabeth Market, and certainly down the southern suburbs in the Onkaparinga Shire. Those suburbs did exceptionally well and are very standout. Over to Perth, we've got those suburbs also down in the southern suburbs, the more affordable areas that went from a $350,000 house to a $500,000 $300,000 house in 12 months. And if you're thinking percentage increase, if you have a $350,000 house that goes up by $150,000, that's a significant increase in its intrinsic value over maybe $1 million house that goes to 1.2. So there are a couple of the standout areas, but one of the very quiet areas that has come through that has been up and down over the past 10 years is actually Townsville. We're starting to see a big culture change in Townsville. We're getting a lot of infill and infrastructure development by councils so that it becomes a real lifestyle choice to live there. Certainly a place where a family can be raised in a really, really good lifestyle that you just couldn't afford to have if you were going back to one of the capital cities. And there are a number of areas within Townsville that seem to be more favoured by others, including Castle Hill. Alligator Creek, interestingly enough, I'm pretty confident that there's probably no alligators in Alligator Creek, but there could be, and Bowley Plains. So they're the kinds of areas that people are starting to look in and really getting a great sense of community, lots of services for families, but also that lifestyle is coming into Townsville as well.
Yeah, we don't police. That's done by Consumer and Business Services. They're the government regulators for real estate down here. It was actually quite surprising when this happened on the 1st of July because I thought, landlords will get swamped with thousands and thousands of pet applications because the statistics of tenants having secret pets is quite high, but the number of applications wasn't really coming in. So I suspect that actually most tenants are still hanging on to their secret pets and not putting in applications.
I think we all know of these people that have got the pets, and it's like an automatic response. Oh, here's the question, have I got pets? Yes, I have, but no goes on the form.
Which is absolutely crazy because if you've now got a cat, and just what tenants do is every routine inspection, which is once every 3 months, you have to remove the cat from the house, hide all the cat litter trays, hide all the cat bowls. So why not put in an application? And pretty much the landlord can't say no, and then you don't have to go through that rigmarole every 3 months. So it has very much surprised me that landlords haven't been flooded.
As I said, wouldn't it be nice to be back in 2001 for people buying properties, just 4 times the average household income? That's a long way away from where we are now.
It is, yeah. I bought my first place when I was 19, just before that time, and I think it was $95,000, which at the time was probably around 4 or 5 times my income.
Yeah, and that's the very reason you got into the market. Well, a lot has shifted, of course, on the global and domestic economic front. One of the more notable developments is now widely accepted. This is the expectation of multiple interest rate cuts by the Reserve Bank. What rationale do you think have contributed to the sudden shift in sentiment from the RBA and the broader financial community?
Yeah, it's quite a swing from a few weeks ago. The rhetoric from the RBA a few weeks ago was not as bullish on additional rate cuts in the near term. And we've probably seen that in our lead flow here with the election coming up locally, with the Trump tariffs, and then no rate cut in the April meeting. We've seen a bit of a slowdown from investor inquiry, which is typical of a pre-election cycle. But I think beyond this news and sort of, I guess, all the media we're seeing about multiple rate cuts, that's the expectation from the markets and from most economists that I'm reading about. I'm seeing predictions anywhere between 3 and 5 cuts in the coming year. Most estimates were totaling either side of maybe it's probably around 75 to 125 basis points at the most bullish end, and that would bring the cash rate down potentially to around 3.1. So I even saw someone predicting a cut of 50 basis points in the next meeting in May. So it'll be interesting to see whether that actually plays out. That expectation is being driven obviously by the escalating global trade tensions. The recent tariffs imposed by your friend President Trump they've heightened fears of a global economic slowdown. And I think international uncertainties have led to market volatility in the share market space. And that's prompting the RBA to consider monetary policy adjustments to bolster that domestic economic stability.
Don't navigate the real estate market alone. Let us help guide you in the world of real estate every day. Make better informed decisions with the latest news and insights.
You've probably sort of had those conversations yourself with regard to some of those vendors and those high price tags in Sydney.
Yeah, g'day, Craig. Great to be here, and some interesting observations that do reflect what we are seeing. We're definitely seeing more parity between buyer and seller. We're absolutely seeing sellers now, I guess, come to the party round price.
Firstly, I've got to get your take on how you think the Trump tariffs potentially are going to impact our housing market in Australia.
Fundamentally, a lot of money's come out of the stock market over the last week or so since all those tariffs have been announced. I don't think we're going to see a reaction like we do on the stock market, where we have sudden fluctuations in prices or people's decision making.
We connect you to the best real estate information across Australia. The Real Estate Podcast.